Most people think reaching $1 million requires extraordinary investing skill. It doesn't. What it requires is consistency, patience, and avoiding a few common mistakes. And that's where many investors fall short. Good morning. Today, we're talking about why most investors never reach the $1 million milestone, even when they invest for years. The first reason is simple: they stop too early. Compounding doesn't look impressive in the beginning. In the early years, progress feels slow. Your portfolio grows gradually, but the numbers don't seem dramatic. That slow start causes frustration, and frustration leads people to abandon the system before the real acceleration begins. The second reason: inconsistent contributions. Consistency matters more than most people realize. Investors often contribute regularly when markets are rising, but during downturns, contributions slow or stop. The problem is that downturns often provide the best opportunities to buy assets at lower prices. Missing those moments reduces long-term growth. The third reason: lifestyle expansion. Income increases over time for many people, but expenses often increase just as fast. A bigger house, more subscriptions, more lifestyle upgrades. If lifestyle expands with income, investing capacity stays the same, and wealth growth slows dramatically. Building $1 million portfolio isn't usually about finding extraordinary investments. It's about staying invested long enough for compounding to work. Time does most of the heavy lifting, but only if the system remains intact. The fourth reason: emotional decisions. Buying during excitement and selling during fear is one of the most damaging patterns in investing. Markets naturally move through cycles, but emotional reactions often turn temporary volatility into permanent losses. Disciplined investors create rules that prevent emotions from controlling decisions. The fifth reason: starting too late. The earlier investing begins, the more powerful compounding becomes. Waiting 5 or 10 years to start investing reduces the amount of time your money has to grow. Even small monthly contributions can become significant over long periods. Reaching $1 million rarely requires extraordinary talent. It requires avoiding the behaviors that interrupt compounding. Stay consistent, control lifestyle growth, reduce emotional decisions, and give your investments time to work. Wealth is rarely built quickly, but it can be built steadily. If this helped you rethink what it takes to build real wealth, subscribe, because here we focus on discipline, structure, and long-term growth.